How's it going, everyone? I hope you all had an amazing week trading. It's been a good week for me. If you didn't have a good week trading, I hope you learned a valuable lesson. I always tell people, try to make a losing trade learning experience. Don't stay down over a losing trade. It happens to everyone. What's important is you learn how to manage your risk and keep them losing trades as small as possible. In this video, I'm going to be telling you how to identify a high probability bounce area, a little bit on how I would manage that trade, the things I look for, and a couple of things I like to stay away from. And for this example, I will be using Tesla, an area I created today. But as always, before we get started, be sure you're subscribed to my channel, click that thumbs up button, and click that bell icon so you don't miss out on any of my upcoming videos. And a quick update before we get going. Live trading, I'm still working on that. I did try to record some this week. I did get some material, but I want to provide only high quality stuff to you all. So hopefully next week is the week for that. Let's get right into this. Let me drag this down where we can see a little better. First off, pull up Tesla, ticker TSLA. Go to the daily time frame. Let's take a look at this bounce area. I had an 880 bounce area, 878, right in that area. Keep in mind, a bounce area is not an exact number, it's an area. That's why we call it area instead of saying, okay, we're not going to buy into this exact number. It doesn't always work like that. So let's pull up the daily time frame. As you can see here, we have a touch here, touch here. So this is a support. Also, what I really liked about this level, we had that 20 SMA sitting there on the daily time frame. That adds to the probability. This is ideal bounce area for me. Now let's go to the hourly to look at some more stuff that I liked about this area. Now I know you've heard me talk about areas of confluence. What I mean with that is you can see back here we have the body, just not the wicks reacting, but the body of certain candles reacting along with wicks touching evenly, creating that, confirming that support area on the hourly, the area of confluence. Okay, this is ideal again. Now my last confirmation I'm looking for is volume. You say, Grizzly, what do you look for when you look at volume? First off, I like taking these bounces off a nice pull down. I like a nice red candle coming down to this area. I like to see a decrease in selling volume, preferably, or take it off a nice green candle coming off that support. With showing me that, some buying volume coming in, some buyers are stepping into the market. And that's what I look for, honestly. I try not to overcomplicate these. If we fail this level, if we get a couple 1 minute candles below this key area, I simply get out for a very small loss. Now, you're probably wondering, what would I need to stay away from? First off, I don't go heavy on bounces if you touch this area any pre-market. As you can see here, we have not touched it. We got kind of close here. I know some people took this bounce off this candle, which there was nothing wrong with that. Me personally, I would have wanted it to pull on down to this. I did not take this trade today. As you can see, it would have worked out nicely. What's that? 878 all the way up to 886. Been a very good move. The contracts would have moved nicely. Now let's talk about how I would manage this trade once I was in. How I would trim. So ideally, let's go to 1 minute so we can look a little more in depth at this. Ideally, we probably would have took it off this candle here when it turned green, right? So we got our entry here around 834. So let's go back to the 5 minute now. We know where our entry would have been. So we got in 834. Then this candle opened. My first trim would have been up here around this 9 EMA. So when I take a bounce, I usually trim once we push up to my closest indicator. So in this instance, it would have been the 9 EMA. I know sometimes it's a VWAP. Whatever's closest, that's where I trim. Then I put my stop loss below the candle before. Or you can just simply, once you fill it with a couple 1 minute candles, you can get out. Whatever you prefer or whatever your trading plan says you stop out at, you always follow that regardless of what anybody says. If that's what keeps you a constantly profitable trader. I would have trimmed at my next big indicator, and my next one would have been, VWAP. I sell first time, I sell half my position. The next trim is half of the remaining position, and that third trim I'm usually out of the trade on these scalps and day trades. That's how I do personally. People that trade with me, I pay per hand sometimes, but that's all right. I lock in profits, I adjust my stop loss accordingly, and I I stay pretty constant. And that is all I have for this video. If you have any questions regarding this video or anything in general, feel free to reach out to me through my DMs. And as always, I appreciate you all for watching, and I'll see you next time.